And then definitely there is no how we can talk about liquidity in the market without bringing in the concept of inducement and liquidity trap. This is very popular. It's one of the things that happens to you guys or some of you guys almost every day in the markets. I've suffered from this for a while until when I figured out this and I got a good mentorship about it. I really, really struggled with that. And it is mostly because of either early entry or anxiety to take a trade or what other people call FOMO in the markets that we get into such kind of traps. So let me quickly say this, that inducement in simple words simply means deception or fake move or whatever will induce you, whatever will make you take action before the ripe moment. All right. So when you look at your chart, look at your setups, and you are eager to take a trade, you just want to be in the trade. That is what inducement is all about. All right. So let me just sketch it for you here so you can see that. Assuming you're taking a sell and you saw price does something like this, boom, break of structure, popularly known as trend continuation pattern. This is a break of structure. You want to come back or you want to see price come back to the premium area. Remember your premium and discount. This is very important. You see, the downward area here is known as the discount and the upper here is known as the premium. Ideally, you take a trade from premium, and if you are selling, that is basically for a sell actually. And then if you're buying from a discount. But then this is a sell scenario. You have a break of structure to the bearish direction. What do you expect to do when you have a break of structure and you expect price to come back up, right? Boom, 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 into the premium area, basically where your key level is. Now, the major thing you must have in mind is key level. Your key level can be a confluence of maybe an order block, a fair value gap, a mitigation block breaker, and all those guys. When you have them in confluence or you have many of them in one place, you have a key level, all right? You can just have just single point of interest, whatever it is, maybe a fair value gap, an order block, and so on and so forth. But then something is telling you that there is something here that should push price down. It will take you forever. You're looking at this as, oh, how long will I wait for price to come up here? And price is already going down. Why wouldn't I jump here? That is exactly what they want you to do. Why wouldn't I enter the trade from here? When you know that up here is what? Your key level. So you begin to see an opportunity down here, right? When you look at this, let me just clean up this mess so I can show you. When you look at this area, you're going to see price now inducing you. And if you're not patient, those of you who are not patient are mostly the ones that get into this trap. You know, price will do something like this and it will just give you an entry here. I want to take it, and that's a sell for you. But then boom, it came back to the what? The key level. So early entry takers, those of you who are obsessed with entry, you get into this trap every day. So avoid taking trade early. All right. Mostly it happens before price even crosses above the 50% level of that particular area. Mostly. All right. I'm not saying every one of them, but then you can even have it in the premium, but then in the premium, you still have another area that has more potential of pushing price. So let me show you on our charts here. All right. This is one of the examples. You see how price was coming down, coming down. I use this place as my break of structure. You can use this place if you want it to be there. It's fine. All right. But then I'm using a bigger perspective from that level. So as price comes into this area, retracing up, you see that this is where some of you are taking trades. And when you take trade from here, trust me, nobody will want to put stop loss up here. No, no, no. It's too big. You don't see that. You want to put your stop loss somewhere here, inside here. And that is what the smart money are looking for. That is why you're going to get stopped out. That is exactly the reason why you will be stopped out. Because the moment price starts what? Going, then boom, you get stopped out. And now here is the original key level. This area, you see a fair value gap, a bearish order block, and what? Another fair value gap here, which is a balanced price range. This holds more reason for price to crash. And once you don't understand this, you're going to be in this maze for a long time. So the only way to do this is to stick to the fact that until price reaches the original point of interest, I do nothing. Or if you're doing this and you're putting your stop loss all the way up there, you're simply being a gambler, because the moment price goes to your stop loss, it means half of the account is gone, because this stop loss is extremely wide. You see that? So you don't take trade early. Now, if you're breaking down this into premium and discount, you're going to find out that most part of it, you see, just a little part of it entered into the premium, and you still have guys here, fair value gap up there, or sometimes you will even have another fair value gap here. So you have a confluences, or you have an arrangement of fair value gaps right at the premium, and the one mostly the one at the extreme is what price will want to deceive you from. The same thing here, not even far from there. You see this, if you're looking at this as a shifting structure, because we've had price does something here, so this could be a shifting structure to the bearish side right there. You can see a market structure shift, or what you call a change of character. Notice something here. Do you see a fair value gap here? Do you see that fair value gap? Do you know that somebody has already taken a sell from here, because it's already showing you reasons to go bearish? I don't know what you're seeing, but then it's already showing you reasons to go bearish from here. Maybe here. All right. It's already showing some of you reasons to go bearish, and that's exactly what price wants to do. If you're taking a sell from here and your stop loss is here, then you are a gambler. You're a professional gambler. And it is going to give you a lot of tough time to work on this. All right. So for those of you who took trade from there and you are waiting for price to come up here, is wrong, because the ideal place is mostly around here. So this is how you're going to put your stop loss rather. And boom, what happened? Price came back to the point of interest that has more reasons for price to come back up. If you're putting your stop loss here, is easier, relatively okay, because this is a safer area for stop loss to be. All right, safer area for stop loss to be. And that is why you need to work on this. You can target first this sell side liquidity on this guy as price comes into this area before you can think of expanding your TP. But then that is how you can get these things correct. Stop taking trade earlier than you were supposed to do. When you go through your chart, you're going to see inducement almost in every part of your chart. All right, almost in every part of your chart. Inducement is almost everywhere. Even this one, you see, they are seeing a fair value gap, they are taking a trade, but then there is another one here, price came back, went up. All right, so this is something that is on your chart, but then for you to be able to identify it, it becomes difficult for some of you guys. So go through your chart, you're going to see a lot of inducement, examples. And once you can do this, you're going to be okay. You see another inducement here. Big bullish order block. All the guys taking the buy from here probably got stopped out, and price went all the way up there to the TP. So please work on that. That is an inducement. In the next video, I'm just going to give you example of all the liquidity entry and how to adjust it so that it will help you in your trading. And then eventually we can go into other aspects of the mentorship.